Welcome everyone. Today we're diving into Solana's latest move in the corporate treasury space, where companies are snapping up SOL tokens for staking rewards.
Yep, it's really turning heads, isn't it? So, companies like BitMining, Upexi, and DeFi Development Corp are making big plays here.
Absolutely. Let's start with BitMining. They recently bought around 27,191 SOL for about $4.5 million dollars and even launched their validator, showing they're serious about staking rewards. It's
hmm
like um, they're planting their flag into the Solana ecosystem.
That's right. And then there's Upexi, which seems to be in a whole different league. They went from holding roughly 735,692 tokens to over 2 million SOL in just
Yep,
1 month. That's some impressive momentum.
for sure. Upexi even mentioned that July was a game changing month for them, especially after raising over $200 million dollars to fuel their Solana purchases.
Exactly.
That's like taking a giant leap, wouldn't you say?
Definitely. And then we've got DeFi Development Corp, which recently increased their SOL holdings by 110,466 tokens, bringing their total to over 1.2 million SOL.
Right, and what's particularly interesting is that all these moves are tied to staking rewards. Companies are not just holding, but actively staking to earn yields, which in Upexi's case apparently nets them an 8% yield, earning around $65,000 a day. It really shows how staking can be a serious revenue
That's
driver.
powerful. But don't you think it's a bit risky relying so heavily on blockchain rewards? There's always a level of volatility in these markets.
Well, yes, there's risk, but these public companies seem to be betting that the rewards outweigh the risks, especially when you consider that the top four Solana holding companies now control over 3.5 million tokens, roughly 0.65% of the
Yep,
circulating
definitely a bold
supply.
play.
They're testing the limits of traditional treasury strategies.
And speaking of treasury strategies, BitMining's plan to possibly raise up to $300 million to build out a Solana token treasury hints that they're not just dabbling, they want to shape the ecosystem around them.
Exactly. It's like um, they're not just buying tokens, they're building infrastructure. BitMining's shift into setting up its own validator is a clear indication of leveraging their SOL investments for long-term benefits.
Yeah, it's kind of like constructing your own power plant, right? Right. But isn't there a concern that focusing too much on staking might concentrate power in a few hands, which might go against decentralization principles?
That's a valid point. Both critics and supporters have debated this. However, the idea is that by earning staking rewards, companies create a win-win scenario. They boost their balance sheets while contributing to network security and decentralization.
I see your
Yet, the
point.
balance between control and decentralization remains a tightrope walk.
Exactly. And it's interesting to see that even companies with core expertise in other fields, like DeFi development, which started out in real estate financing, are pivoting into blockchain. It's a sign that digital assets are becoming mainstream.
Um, yes, it's like the old guard of finance is now eyeing blockchain as a serious investment
Right,
opportunity.
right.
And with BitGo speculating that these moves are part of a broader trend, it seems more public firms are expected to adopt Solana for strategic differentiation.
And isn't it fascinating how these staking yields provide companies with a steady flow of revenue? I mean, earning $65,000 a day from SOL holdings, it's almost like having an interest bearing bank account, but with digital assets.
hmm Exactly. It's kind of innovative. It's like imagine if traditional banks offered such high yields without the collateral hoops. This move might actually force traditional finance to rethink their treasury strategies.
Sure, but there's also a debate on whether this yields consistency over the long run. The crypto market is volatile, and while staking rewards are attractive now, any drastic market shifts could change the game entirely.
True that. Absolutely. Market volatility is always a factor. But what's clear is that public companies are embracing Solana as not just another digital asset, but as a core component of their financial strategy. It's a strategic diversification that's really shifting the landscape.
Yeah, and it certainly redefines how we look at treasury management. And let's not forget SOL Strategies, the Canadian public company focusing on building Solana infrastructure. They're also in the mix. It's a full spectrum approach from holding to active engagement in the ecosystem.
Right. It seems like each of these companies is choosing a slightly different strategy. Some prefer staking directly, others are investing in infrastructure, and some are expanding their token treasuries.
Absolutely,
It's
exactly.
almost like they're tailoring their approaches based on what best fits their business models and risk tolerance.
Now, I'm curious, do you think these moves will spur more institutional investors to jump on Solana? Or could this be a niche scenario limited to a few forward-thinking companies?
Well, it's hard to say definitively, but the trend definitely indicates broader institutional interest. BitGo even noted that while Bitcoin made waves initially, companies now look to reward generating assets like Sol for both strategic exposure and revenue generation.
That makes sense. And I mean, if even traditional companies are shifting strategies to include blockchain assets, that's a strong signal that the digital asset space is not just a fad.
Exactly. It's an evolution of financial strategy itself, bridging the gap between digital innovation and traditional finance.
Yeah,
This
exactly.
convergence is where the future of finance might just be headed.
Definitely interesting times. The pace of innovation is astonishing, and these companies are at the forefront of blending new tech with old finance habits.
Totally. And it's like every move we see from these companies, whether it's a multi-million-dollar purchase or setting up a validator, adds more evidence that blockchain is here to stay and evolve.
That's the big picture. Before we wrap up, I have to ask, don't you think there's a bit of over optimism here? What if the market doesn't yield the expected rewards or regulatory hurdles slow things down?
That's a fair critique. Regulatory uncertainties and market volatility are definitely challenges. However, these companies seem to be hedging their bets by gradually increasing their exposure and building critical infrastructure. They're not going in all at once, but rather methodically bolstering their positions in the Solana ecosystem.
Right, a measured approach, right? And that approach might just help them mitigate risks while still capitalizing on the innovative yield opportunities.
Exactly. So, whether it's staking for daily revenue or building a robust ecosystem around a sol, these public companies are redefining the intersection of traditional finance and blockchain technology.
Definitely a trend to watch. It really will be interesting to see how this plays out in the long run. The dynamics of staking, blockchain infrastructure, and institutional adoption might set new standards for asset management.
Absolutely. We're on the brink of a new chapter in digital finance, and Solana's staking rewards might just be the catalyst for many more institutional moves. Thanks for tuning in, everyone. Stay curious about where this evolution takes us next.